All right, welcome back to Robinhood Stock Market Watch List. My name is Carlos, and today is Sunday, October 30th. We are going over our stock market meeting for the week of October 31st, and so it's going to be a very, very busy week. We're going to talk a lot about what's scheduled to happen. That way we know what's going to happen before it happens. Just makes life and trading so much easier rather than going into the day not knowing anything and just kind of winging it, because it's extremely important. The pros have this old saying, plan your trade and trade your plan. And Benjamin Franklin also says that if you fail to plan, you're planning to fail. And so that's not us. And so we're always doing our due diligence on a daily basis as well as on a weekly basis. And that's why we have these live meetings. That way we can kind of come together and talk a lot about stuff and share information and events and everything. One of the most important things that's highly critical that we always need to talk about is things that will have the biggest impact on the stock market. And one of those things is economic reports, because those have a huge impact on the stock market, because they talk a lot about the economy, whether it's growing or declining, as well as many other things like inflation or interest rates and stuff. So and there's a lot that's scheduled to happen this week, so let's go ahead and dive into that now. And so one of our best sources that we like to use is a website and an application that's called investing.com. Now I already have our economic reports that are scheduled for this week pulled up. Here, though, when looking at the times on the left side, these are the times of when they're going to be released. When we're looking at on the website, these are going to default to the Eastern time zone. So depending on where you're at with your time zone, you may have to do a little calculation, and that way you know exactly if the economic report is going to be released before the market opens, so that way we know if it affects the pre-market, or will it be released after the market opens, affecting after when it opens. And so but a lot of these things are scheduled to happen for specific reasons, and usually it's to build a lot more volatility and momentum, because you'll notice that a lot of the economic reports will be early in the morning, but then all of a sudden we have other scheduled events that happen either in the middle of the day or right before close, like when Biden talks about something, or the White House has a press conference or something. These are placed there for multiple reasons, as well as to provide more volatility with the stock market. Otherwise, they would just do these after the market closed, and rather than 1 hour before the market closes. And so the first hour and the last hour of the market is always the most volatile points of the day. And so, like I said, these are scheduled for specific reasons. And so going into looking at, so normally we see economic reports that are scheduled usually 3 times a week. We have a Tuesday, Wednesday, and a Thursday. Very rare do we ever see an economic report scheduled for a Monday or a Friday. Now, we don't see one scheduled for Monday here, but we definitely see some on Friday, because there's just a lot more that they probably just wasn't really able to fit into 3 days. And so Monday is usually kind of a little bit more of a laid back day. There's there's nothing scheduled to happen, but Mondays are usually either a recovery day from the week before, or maybe it's absorbing some weekend news, and there's been quite a bit of weekend news between Elon Musk and Twitter to Russia and Ukraine. We got the wheat dilemma going on, and people are trying to decipher, is this bearish news, is this bullish news? Well, it may sound like bad news, but a lot of times bad news is good news. And when you have when you're trying to create a short supply and that has a high demand, it just makes it more valuable. And so weak companies may be more profitable, and because they have to raise prices and blah blah blah. And so I mean, there's just a lot of stuff going on, even with China or Taiwan. I mean, there's as well as other things that are going on behind curtains and whatnot. And so so Monday is just kind of it's gonna just to be determined. We'll have to kind of and a lot of times it can be based off of earnings, which we'll get into here in a little bit. But Tuesday, which is a whole new month, and but we have the ISM manufacturing PMI report for the month of October. Now, the more rare that these reports are going to be, I mean, the more rare that they are, in between each other. Like if it's a weekly report, it's not that rare. If it's a monthly report, it's kind of rare because it happens every 30 days. Or a quarterly report, like we saw last week, is more rare. And so the more rare that it is, the more volatility it's going to provide the market. And so the monthly reports are going to provide a good amount of volatility on Tuesday morning, 30 minutes after the stock market opens. And you can change the timing settings. If you need to change it to your time zone, you can. But if you're looking at your mobile application, it should automatically change it to your time zone. So that way, you don't have to change anything. But the website doesn't know until further notice. But if you're not sure what the report is, feel free to click on it. A new tab will appear that'll provide you a paragraph letting you know what it is and how it can affect the stock market right down below. And so, but there's only so many economic reports that are very important that eventually you'll start to memorize what they are and how it'll affect the market. And most of the numbers, we need those up. We need them higher. Higher the better, but some of them we need them lower, like the crude oil inventories or the initial jobless claims, which is the unemployment report. These numbers need to be down because that means it's helping the economy. People are working, they're spending money, they're paying taxes. Or oil inventory levels, if those are down, that means people are driving, they're spending money, they're helping. This is helping the economy. But the key thing too is to also look at between the previous report and the forecast report, because that is how the majority of investors are going to speculate bearish characteristics or bullish characteristics. That's a key thing here, you guys. And so if the previous report was 50.9 and the forecast is 49.9, that means investors, the majority of investors, are going to be bearish for that report. Same thing with the JOLTS job openings report for September is slightly down compared to the previous report. So if one was higher, one was lower, maybe we can expect a little bit of mix, but both of them are expected or forecast to be slightly lower. So that means a decline in growth. Investors don't like that. They're all about sell, before it gets down even lower. And so that could, especially with the day before the interest rate hike, which we are expecting another 0.75% interest rate hike. Now they have led investors to believe that this may be their last aggressive interest rate hike. We could start seeing maybe 0.5%, here on out. But to be determined. They always make people led to believe people to believe certain things, and then they're like, oh no, we changed our mind, and so just don't fall for that. And so we just got to see what's actually really going on. And so but with Wednesday morning, the first report, which is scheduled to be released about an hour and 15 minutes before the stock market opens. And so this is going to create some volatility. Now this says the ADP non-farm employment change for the month of October, and so the previous report was 208, and so the forecast is saying it's going to be a little lower. So there just hasn't been, I think, a whole lot of new jobs being added to the to the economy. So that could show a decline in growth, and so which is really the intention of what our government's trying to do. They're trying to they're trying to crash the economy so that way they can lower inflation from them raising it in 2020, and so all this is just is part of a economic cycle that they like to repeat. And so but this definitely looks bearish. Crude oil inventories, there's no forecast in this yet, but there will be most likely tomorrow morning during pre-market. But the number was a little higher, which was bearish. This time it should be lower, which should be bullish. And so we're kind of seeing two mixed signals. So before the market opens, we could see a lot of bearish characteristics. Crude oil inventories, that should provide us some bullish characteristics, but the whole federal interest rate, I'm pretty sure investors are pretty confident that it's going to be what it's going to be. And so the market could easily react much sooner. It could react Monday as well as Tuesday with this interest rate decision. And even though we could expect bearish characteristics, but we could see bullish characteristics, because investors could think maybe they see the light at the end of the tunnel. This may be the last aggressive interest rate hike, and here it's all downhill from here. And if they feel that way, we could see a lot of bullish characteristics. And so, but that's one of the reasons why we highly recommend always straddling, because straddling is when when we bet the stock goes up and down at the same time, because it's due to the manipulation and things, volatility. Things could plunge or they could surge. All at the same time, on the same day. And so you can only lose what you have on one side, but your gains on the other side are potentially unlimited. Meaning where you could lose 100% on one side, but your gains on the other side could be 200%, 500%, or 1,000%, which outdoes the other side and puts you ahead. And so most of the time, a lot of straddlers will buy at the same time, sell at the same time, but we can sell at different times so we can maximize our gains on one side while minimizing our losses on the other side. So Wednesday, it just looks like it's just this whole week it just looks like it's going to be really, really volatile, mixed in with a lot of earnings, because big company earnings has a huge impact on other industries as well as the entire stock market. And so but then Thursday we have the unemployment report, which is scheduled for 1 hour before the stock market opens, and it has been trickling down, which the government is trying to get that up, because as part of this whole trying to crash the economy, everything needs to be everything needs to be bearish. And so but unemployment just seems to be really, really low, and that's as they try to I think as they try to lower a lot of major companies' market capital, like Facebook and whatnot. What was the other one that had plunged? the other day, what was it, Netflix or something, but they, these may force these companies to start doing layoffs and letting people go, and they're going to have to start, filing for unemployment, just like a lot of the people from Twitter. And so we should start seeing the unemployment numbers start to rise. Probably not so much this week, but next week. And so it's going to be very interesting to see. But as unemployment starts going up, that's going to provide more bearish characteristics, and that's what these two numbers are telling us right now. Is be prepared for bearish characteristics 1 hour before the stock market opens on Thursday. Then we have the ISM non-manufacturing report that's scheduled to be released 30 minutes after the stock market opens. And it's telling us the same thing because the number is lower than the previous. And so this is saying be prepared for bearish characteristics on Thursday. And then Friday, these two reports are scheduled to be released 1 hour before the stock market opens, then which we have the non-farm payrolls for the month of October, and then the unemployment rate. Now, the non-farm payrolls is a little lower than the previous, and so and then the unemployment rate looks like it's a little bit higher than the previous. So both of them are showing more bearish characteristics or bearish signals, however you want to take that. But yeah, I mean, so this is going to be a very volatile week, but it looks like it has the majority of the economic reports look bearish. And so just be prepared as we get into the continuing on into the earnings season. I just had uploaded, where did I put all that stuff here? So everything that I upload is in the featured area of our groups. When we click on there, yesterday I just uploaded our schedule for the earnings, which is right here. So the most anticipated earning release scheduled for this week is AMD, Sophie, Uber, Semi, Roku, Pfizer, PayPal, the Devon Energy, Airbnb, and BP. And feel free to click on it. It definitely provides a lot of other miscellaneous earnings that are also may have some pretty high market caps, but like Fubo, DraftKings, whatnot, Coinbase. But the top 10 is really the ones we're going to focus on the most, and one of them was BP. As we get more into energy, and this is for the third quarter. And so BP, which is scheduled to release their earnings on Tuesday morning before the stock market opens on November 1st. BP's earnings release has a 67% expecting an earnings beat, which is about average. Usually average is around 65%. But however, option traders are pricing in around a 4 to a 5% price movement either direction, which is a little more than what it normally does. Next one is Airbnb. Airbnb is scheduled to release their earnings on Tuesday after the stock market closes. Airbnb's earnings release has a 42% expecting an earnings beat, while option traders are pricing in around a 9.5% price movement, which is almost double compared to what it normally does. So a lot of option traders are pricing in a lot of some volatility with this one. Next one is Devon Energy, as energy is becoming a very hot topic lately. With all sorts of things as we get into winter, as well as the war going on in Ukraine. And I don't know if you guys have heard, but there's a lot of other rumors in the news world about a diesel shortage here in the United States. And they're saying that we have like a 25-day supply in diesel. Diesel, just does a lot for our economy, and if there's a shortage, this could be catastrophic. And so, but I think as we, as they talk more about that, they're probably we're gonna do more, probably pump more oil here and just do things more locally. And so but we're seeing that Devon Energy has the highest percentage expecting an earnings beat than any other earnings this week, at 88% expecting an earnings beat. That is huge and way above average. Option traders are pricing in around a 6.5% price movement with Devon Energy, where normally it moves right around 4.5%. PayPal, another big one. PayPal is expected to release their earnings on Thursday after the stock market closes. PayPal's earning release has a 52% expecting an earnings beat, which is not good. I wish it was a little bit more. PayPal was one of the first credit card processing companies back in the 90s. And did you know that Elon Musk was one of the co-founders of PayPal, and he actually sold it to eBay and had them integrate it into their system a little better. And then Elon Musk was able to use that money to invest it and to create Tesla, and then just kind of domino effect after that. Tesla and then SpaceX and all kinds of stuff. The internet thing that they have, the Starlink, the Neuralink for the chip in your brain and whatnot. I mean, it all started with PayPal, and so it's very interesting, but. It just hasn't been the same since he sold it. But option traders are pricing in around 11 to 12% price movement with this, and where it normally moves right around that, but we're expecting a little bit more volatility with this one. Pfizer, that's another big one that's going to be all over the news. Is going to be released on Tuesday before the stock market opens. Now, Pfizer's earnings release has a 46% expecting an earnings beat. As a lot of people are no longer confident about the COVID vaccines, treating it like a flu shot, and just people have really have a lot lower confidence in this, and so they're just not making as much revenue as before. Most of the time they just rely on a lot of household over-the-counter products like Advil and other things. But option traders are pricing in around a 4.5% price movement with Pfizer. So, but it's going to be interesting. So it's not going to be that volatile compared to some of these other ones like Roku, for example. Roku is huge. Roku used to be like the leader in smart televisions. However, they have competition just like anything else, and I think it seems like Amazon has really dominated that, like the Amazon Fire Stick or whatever. But a lot of the TVs are starting to kind of come out with their own stuff too, like Samsung and whatnot. So. But Roku for the longest time used to dominate that. They were the most and the best. And but like I said, there's just a lot of other great comparable ones out there. But Roku is expected to release their earnings report on Wednesday after the stock market closes. The company's earning release has a 33% expecting an earnings beat. That's going to be one of the lowest percentage expecting an earnings beat for this week. Option traders are pricing in around a 17.8% price movement on Roku this week. Normally, lately it's been moving a lot, usually in the downwards direction. But it almost seems like this. We're expecting it just to be even more volatile. And just like what we've seen in the last couple weeks with our meetings, we've talked about like Facebook. Though Facebook had plunged down a lot more than what we anticipated. Facebook, let's look at that really quick. What was that before? It was what was it, like 12.9 or something like that? Let's take a look at last week's. So Facebook, we anticipated it to be around 13.5%, and it did double that. It did like 25%. That is crazy. And so, but it did a lot more than what we anticipated. Amazon same thing. I mean, that was crazy. We expected a lot of movement out of Amazon, maybe up to 10%, but when it dropped like 20%, but it slowly recovered, so it was down about 10%. So that was just really, really, bizarre. But yeah, definitely expect. And so we could potentially see maybe even a 30% drop on Roku. So this whole 17.8% price movement in either direction might be modest. And so but just be prepared. This may be a great straddling lottery play in case if things don't work out. A lottery meaning where in case if it doesn't move at all, both the calls and the puts may get what's called an IV crush, or what's also called implied volatility crush, and that'll devalue both the calls and the puts at the same time. But most likely that's probably not going to happen with this one. But as a lottery play, we don't want to invest heavy. We want to go light. But in case if like if, for example, you guys bought the Mega Millions or the Powerball ticket, I mean, we're not really expecting to win, $800 million, but it would be nice. But we're not going to invest, our entire savings account or whatever into it. We're not going to go heavy into it. But if we just go light, and if we win, we'll win big. And so, but it's just important that we utilize certain rules, so that way we can always maintain consistency, so that way we're always moving forward, not backwards. And so but this is going to be a great straddling lottery play for this week. Next one is going to be the on semi for the semiconductors. They make a lot of microchips for American companies, especially for the automotive industry. Probably out of all any industry, the automotive industry probably consumes the majority of microchips. Did you know that the average car usually has about 1,000 microchips? And if your car is maybe even a hybrid or fully loaded, whatever, with all the bells and whistles, your vehicle may contain up to 2,000 microchips. That is absolutely crazy, and these are absolutely needed for that. But not only that, but also the military, right? Especially for right now. But but it's just a very in demand, and if they don't have enough raw earth materials to manufacture these, they may not be able to manufacture them at all. And so that if they can't, then that's where we've been seeing them struggle with their financial earnings. And so with On Semi, or On for their ticker, is scheduled to be released their earnings on Monday morning. So tomorrow morning, this is going to create a lot of volatility, not just for this company, but also other semiconductor companies like AMD, Nvidia, and so on. And so, but with On, earnings release has a 61% expecting earnings beat, which is right around average. It's just slightly below by a couple percentages, but option traders are pricing in around a 9.5% price movement in either direction. Now, Uber is next. Uber is scheduled to release their earnings on Tuesday morning before the stock market opens. The company's earning release has a 42% expecting an earnings beat, especially with and it always fluctuates, but I just don't think we're seeing as many drivers. We're not just seeing a lot of activity on people doing things, and so this is not looking good for Uber at a 42%. However, option traders are pricing in around 11.5% price movement. And on Uber, where normally it moves right around 7%. So definitely expect a lot of volatility with Uber. And what affects one may affect the other, like Lyft. And so if you didn't want to, if you did not want to be affected by implied volatility crush or IV crush, you can always maybe straddle the opposite stock or its competitor like Lyft. Now, some of us did that with Twitter last week with the whole Facebook thing, but they had announced that Twitter was going to get delisted on Monday. So that created an implied volatility crush that crushed both sides, unfortunately. But then next one is Sophie. Sophie is scheduled to release their earnings on Tuesday after the stock market closes. Sophie's earnings release has a 66% expecting an earnings beat, which is right around average. However, option traders are pricing in around a 17.5% price movement in either direction. And according to this, there's a 66% chance that 17% is going to go in the upwards direction. So there's definitely a lot of volatility expected on Sophie for some reason. Last but not least is AMD. AMD is a huge manufacturer in these microchips. They make them for all kinds of things, not just computers, but also video game consoles and whatnot. But AMD is scheduled to release their earnings on Tuesday after the stock market closes on November 1st. The company's earnings release has a 44% expecting an earnings beat, which is not bad. That's not good. That is definitely bad. But option traders are pricing in around an 8.5% price movement in either direction. The next thing that's always important to do when we do our due diligence during the weekend, looking at economic reports and earnings, is to always double check the top 5 things to watch in the markets ahead by investing.com, because they've done the same similar due diligence. So we always need to make sure what their priority is that'll have the biggest impact on the market, like the interest rate hike. But it says that the Federal Reserve and the Bank of England are all but certain to deliver a jumbo 75 basis point rate hike, which is a 3/4% interest rate hike on Wednesday and Thursday, respectively, as the battle against the sky-high inflation continues. But with the investors now on the lookout for signs that aggressive monetary tightening could start to slow, Friday's United States jobs report for October and Monday's Eurozone inflation report will be in the spotlight. And with earnings season at the halfway mark of the week ahead, we'll show whether the United States equities can continue to take disappointing corporate results in stride. So here's what we need to know. So the first thing is the federal interest rate hike that we've already talked about. Next one is the U.S. jobs data for the month of October. Then the third one, the most important one, is the Bank of England rate hike, because that'll have a slight effect on our economy, as well as number 4, the Eurozone data, which will talk about more of the inflation estimate for the month of October. And then the 5th one is the financial earnings, and so they'll list a couple other ones that we may not have talked about, like Lilly or this other Philips one, Qualcomm, and so on. But yeah, so those are just really important ones to kind of look at as well. And so hopefully that part makes sense. Let's take a look at the options activity really fast. Let's see here. So options activity, we always like to look at that through the barchart.com. Now when we're looking at this during the weekend, this is basically Friday's activity right at close. And so we have this in order. The most active stock options by options volume. And volume is always today's or the current trading day's buying and selling activity. And so there was just a massive amount of options activity on a Friday between Amazon, Apple, and Tesla. Now these 3 are the primary stock options that most option traders like to day trade and to swing trade. And so, but we can see out of this amount of tremendous amount of options volume that Amazon, most of them were, I'd say, bearish going into Monday. And so, I mean, Amazon was down, as we were talking about, when they released their earnings on Thursday. They had plunged down to 20%. We've never seen Amazon do that, but it had quickly, slowly but surely recovered, and so it ended the day at 6.8, down 6.8%. But a lot of people were buying puts, especially going into Monday, where about 44% were buying calls. So, but a lot of times you'll see a lot of straddling activity. You'll see a lot of 50-50 almost, and so and that's perfect, because like I said, you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So let's take a closer look at Apple's individual calls and puts. So, and I usually like to use NASDAQ to show me the most active individual calls and puts. And so we can see all of the most active calls, most active puts. We can see the percentage loss, which, like I said, it never exceeds over 100%, because you can only lose what you put into it. But your gains, like for this one, this is a $150 call strike price, just gained 248%. So it over doubled your gains. And so that is just really, really important, and that is why we always straddle. And so, but we can kind of follow the money, and that's one of our rules, is always follow the money. And so that's why we like to straddle either the top 5, top 3. But we can also use this percentage base to, maybe we can figure out if we want to go more heavier on calls or heavier on puts. Now with Apple, obviously it's 50-50, but Amazon, it's almost 60-40. So if you're that bearish and certain that the next day will be down, you can go up to maybe 60% on puts, 40% on calls. You just don't want to go over that, because if you're wrong, you might not be able to make up your loss. And so and that's why we can do it 60-40, because if you are wrong, you can make up your loss. Or sometimes if it's really volatile, you can still come out ahead. And so, but you just left a little bit of money on the table, because you could have just did 50-50. And so, but a lot of times when we're looking down this list, sometimes we'll see things that are regularly on here every day on a daily basis, and sometimes we'll see things that are not normally on here. And sometimes we got to look at that as unusual activity, because if it's not normally on here and all of a sudden it is, that's like something flying underneath the radar. And we've seen that all the time with different things before something happens or during when something happens. But we can also look at unusual percentage ratios. Like if there was like this, for example, 84% calls, and while 15% puts, something's going on here. And GameStop, which is up, over 8%, a lot of people are betting that GameStop is going to continue to go up going into the next trading day. And so, unless it's really heavily manipulated, what if it was like 99%, whatever, it's like sometimes something's going on where they're manipulating it, and usually the next day it does the opposite, goes down. And so if it's too good to be true, then it probably is. And so, but this looks more realistic, but like I said, if we're in that 95-99%, that's unrealistic. And so this is pushing it though. But GameStop is one of those that are a manipulated stock, which is something that a lot of investors like to avoid. Another great feature to look at on here is the option volume leaders. Option volume leaders kind of points out the most active individual calls and puts out of the entire system. But when we're looking at it during the weekend, we want to make sure that it's not expired. A lot of the expiration dates are here, but we also have DTE, which shows the number of days until that option expires. So it's all 0, which means it's no longer valid. So we want to avoid those and start focusing on the ones that do have the numbers. For example, this Apple call, it's a $160 call strike price. So out of everything that's currently active in the system, these Apple and Tesla calls are the ones that are remaining the most active. So we have the top 3 are calls going into tomorrow or the new week, and Tesla right now is at $228. We have a $250 call strike price. So another way to kind of measure this too is by looking at the volume in the open interest. Now, if you're new to options and you're not familiar with open interest is the total number of open contracts that have been traded but not yet liquidated via offsetting trades. That means that investors have bought that particular option and they have not sold it yet. In other words, they're holding on to it. The volume, which is the current day's buying and selling activity. So every day it resets itself back to zero and it starts over. But a lot of times we don't always know if is it mostly buying activity or is it mostly selling activity. So here's a great way to determine that. If the open interest, let's say it had only 14,000 that are holding, and now we have 77,000 people that had just bought into it, that means that this is pure buying activity. This is showing that people are buying it and they're holding on to it, which also means that going into the next trading day, this volume and open interest will then merge itself within each other. So now it'll be like 90,000 in open interest rather than 14,000. So it has provided more interest that has not updated yet. And so, but if it was the other way around, if the open interest was high and then we had a volume that was lower than the open interest, that could mean it's selling activity. People could be dumping it, getting rid of it, and getting into something else. So, but this is, like I said, these are very, very important clues that provide a tremendous amount of value. And so, but it just looks like that the majority of investors with this kind of volume, they're bullish for Monday. So that is our clue for will Monday morning be green or red? Follow the money. The money is saying Monday is going to open in the green. And so next one down is the Amazon. We have an Amazon put, but this is a $150 put that expires next January the 20th. And so, but we can see, as we were just talking about, the differences between volume and open interest. The open interest is 61,000, which is quite a bit, where the volume now is 56,000. It is less than the open interest, which is the opposite compared to the other ones. So most likely, since Amazon is now already in the money, people are most likely dumping it. They're getting rid of it and probably buying calls or something. Like for example, right here, as we were just talking about, I haven't gotten to it yet, but they probably got that and quickly got the $105 call that expires this Friday. Because you can see that the open interest really had no interest at all. It had 433, and now you can see we have 50,000 in pure buying activity, buying this because they are bullish going into Monday or even this week. And so, but once it reaches that, most likely they'll probably dump it on Monday, and we'll probably see them buy $110 or $115 or whatever, to be determined. But that's just kind of the way we can see where people are trading, where's the money going, and whether it's going up or whether they're betting it's going up or down. And so really we only see really a couple puts here, but not much. So it looks like the majority of this is bullish. Now, if you may be someone that doesn't have a lot of time to look at the stock market throughout the day. Maybe you have to buy and you hold, due to whatever. And so if you're that way, you don't want to really so much focus on the volume at this point. You want to focus more on the open interest stock options, because the stock open interest traders they hold longer, because versus volume traders, they're usually in and they're out very, very quickly. It could be within 5 minutes, could be an hour or a day, a couple days. But open interest, so if I click on it, it'll refresh it, and I'll refresh the browser really quick. So that way it refreshes the whole system. Now we can see the whole entire stock option system sorted out by the highest open interest. So this is showing what people have bought, and they're holding on to it for a duration amount of time. So the highest ones we're seeing is the PBR, which is that the Brazil petroleum, is the oil company. So we're seeing a lot more of this as oil is becoming more of a valuable thing due to short supplies and whatnot. We just talked about how there's rumors with the news about a possible massive shortage on diesel. We have like a 20 or 25 days supply. And so, but this could mean as PBR maybe flying under the radar, maybe we're going to start buying more oil and stuff from Brazil. Who knows? But we do see a lot of calls and puts mixed in with this. So a lot of straddling going on there for some reason. So investors aren't certain that PBR is going to go in a particular direction, but it looks like they are certain that they are expecting volatility. And so PBR, we have an $18 call that expires this Friday, and for it having that one of the highest open interests in a short expiration date is very, very rare. And so, but we do have a very high open interest, a very low amount of volume, because maybe they're dumping it. I mean, who knows? But we do see that we do have a put strike price, a $12 put strike price. So we do have a couple what's called strangling. Straddle, strangle are the same concept, where you're betting one goes up, one goes down. A straddle is the same strike price. A strangle are two different strike prices. One is usually higher while the other one's slightly lower. But we definitely have different expiration dates. When you're straddling or strangling, you definitely want to keep the same expiration dates. But we do see a little bit more volume on the put than we do the call. GameStop is third place. It's lately over the weeks, it's definitely been trickling up there. And this is a $237 call strike price. It's like, what is going on there? And I mean, this is definitely one of those manipulated stocks, but it's really hard to believe, is this something that's actually going to happen or not? Now, Bed Bath & Beyond has been kind of doing the same thing, which is currently at $4.59, but we have an $80 call strike price. Now, even if it got to $10, even if you're not into options, you can still utilize this information to buy shares. And even if you bought this at less than $5 a share and it gets to $10, you just gained 100%. Even if it gets to $20, you just gained 300% just by holding it. Now, Bed Bath & Beyond has been manipulated a lot this year. It's gone through a lot of issues. The CFO had committed suicide. And I mean, there's just been a lot of brain damage with Bed Bath & Beyond. However, Bed Bath & Beyond's prime time is during the fourth quarter, because it's the holiday season. This is the season like Black Fridays, and we got Christmas, we got weddings, we got all kinds of stuff going on. And so this is the time where a lot of people do a lot of shopping in Bed Bath & Beyond. Once we get into the next earnings season, as they announce how well they did, the stock is going to be a lot higher than what it is now. And so I can't imagine it getting to 80. I think what it normally is, a $30 stock, $40 stock. But it's going to be pretty huge, and it's been accumulating more and more interest every single week, because it was on the bottom of the list and it's been trickling up every meeting that we have, and now here it is, fourth place. So that means probably next week in our meeting, this thing's probably going to be third or second, maybe even first place. And so, but definitely we've seen a lot more of these PBRs all over this thing. But American Airlines, which seems to be up lately. Wow, $14. It was around $13 or $12 not that long ago. But the investors are still very, very bearish on American Airlines. We have several very bearish strike prices that go out pretty far out into 2023 and 2025. And these are also been accumulating a lot of interest and trickling up the top of the list. Ford Motor Company, we have a $15 call, which Ford Motor Company is currently at $13.26 a share. We are experiencing a lot more open interest as time goes on. And they're manufacturing a lot more 2023 models. They're taking a lot more orders and stuff. So they're really ramping up right now, and they're still building new factories around the country. And so once those get into a certain point, they'll be able to start more production on that. Probably in what, like a year or two at most. And so we'll see Ford Motor Company back in that $20-25 area where it was before Russia invaded Ukraine. Then we have Bank of America, which is currently at $36.18, but we have a $40 strike price that expires in January. And so that one's also been accumulating a little bit of open interest over time. And then Intel, which just had earnings last week, is currently at $29.07. We have a $35 call strike price that expires in about another year from now, in January 2024. So there's just a lot of great, information. You utilize this on a daily basis, and it does update regularly throughout the day, at least every 15 minutes. Now, going back to the most active options, if you're into ETFs, which we can look at as well, but the thing with ETFs is that there's usually 3 expiration dates per week compared to regular stock options that have only 1 expiration date. ETFs usually expire on a Monday, a Wednesday, and a Friday. Most of this information is really going to provide more day trading analytics in a way. And so these people don't normally buy and hold these, and as well as a lot of this, the call put ratio, a lot of it is going to be based on contracts that are expired. And so, because like I said, they're usually trading the same day expirations, and so that's why when we're looking ahead to the next trading day, we want to focus more on the stock options, because these are what people are buying and holding on to going into the next trading day. And so the other really important thing to always be aware of, other than earnings and economic reports, is the president and the White House. And it doesn't matter how we feel, how our personal feelings are regarding the president or the White House, but the important part to understand is that it affects the stock market. So we have to, when it comes to investing and trading, we always have to be aware of our emotions and how that can impact our buying and selling decisions. And so we have to always remove the emotions and to think more logically, strategically, and analytically. We always have to remind ourselves, when we think of something or hear something or see something, ask ourselves, how will that affect the stock market? And so and that's why it's important that we always look at these scheduled events, because they have a huge impact on the stock market. Though unfortunately the president's and the White House schedules are only updated every 24 hours, because things happen all the time, and so they're always having to schedule different things and whatnot. There's just no weekly plan. Plus it could be maybe a security issue as well, but it's just important. If you Google Joe Biden's schedule, it should be the first website that pops up. And so but we can always look, for example, like right here. So on Friday we had at 6:10 p.m. This is going to be Eastern time, so it depends on your time zone. You have to do a little calculation so you are aware of what time these are going to happen. And so this might be new, but when we're looking for the president, we're looking for this. The president delivers remarks. That means the president is going to speak. And a lot of times it'll say what he's going to talk about. And a lot of times it could be something that could affect the stock market, or it could be something that could affect a particular industry of the stock market. Let me see if I can find something here. Let's see. There was another one. Let's see. They were talking about microchips. What day was that? But they were talking about like the micron microchips in particularly, and so when they have an event that's scheduled to talk about something like microchips, that can affect the whole segment of the stock market for semiconductors. And so that's why it's just really important. That way we can determine whether it could be bullish or bearish. Especially if it's something that Biden wants to talk about that really doesn't have anything to do with the economy, we default that to bearish, because the market and the economy does not like Joe Biden. And so if he's going to talk about something that it just doesn't have anything to do with the market or helping the market or the economy, it's automatically going to be bearish. And so unless we get another somebody as a president that the market likes, then that would be different. Then if but like I said, make sure you keep this in your bookmarks. This is just really, really important because, like I said, it's very valuable. And so let me see if there's something else here. And then as another reminder, quantitative tightening has not gone away. And if you're new, don't know what quantitative tightening is, it is when the government is scheduled to sell stocks that they bought, and which is what was called quantitative easing, and which they did. They started buying a tremendous amount of stocks in 2020 when they forced the economy to shut down during the second quarter. And when they closed the economy down, they told everybody to go home unless you're an essential worker, working at a grocery store, medical clinic, whatever. And so the stock market had tanked, and the government was like, well, we're going to start buying billions and billions of dollars worth of stocks, trying to keep the economy afloat and the stocks, from tanking even more. And so they started buying billions and billions of dollars worth of stocks. And as a reminder, oil had reached under $1. I've never seen a barrel of oil for less than $1. Technically, it was in the negatives. I've never seen it. It was under like a negative $5. But the government started buying stocks when things were dirt cheap, and so it just makes you wonder. But now they're selling the stocks they bought, and at the time, we had somebody that was able to provide us a schedule, and that's when I had learned that this information is available to the public, but it is extremely hard to find. They don't want you guys to know this stuff, and so they make it hard to find it. They make it hard to understand it, unless you have someone that can help provide you a little bit of information. And so these are the dates of when these are going to take place. So the next one is going to be November 1st. And so they are scheduled to sell $5.1 billion worth of stocks. Now, this Thursday, this is huge. This is the biggest one that we've seen, and it may be the biggest one out of the whole entire quantitative tightening phase. Is this Thursday. This is going to be pretty catastrophic. $21 billion of stocks just sold like that. And so, but they're very tricky with this stuff. Even though this is scheduled to happen that day, they could execute this during pre-market. They can execute it during the middle of the day. They could even execute it during after hours, even 1 second before after hours closes, making it look like that it was never even executed that day at all. But when they execute it 1 second before after hours closes, that means that'll affect the next trading day. So just be aware that Tuesday and this Thursday is scheduled to sell almost over $26 billion worth of stocks. And so as we're seeing, as we're doing our due diligence, we see that Monday morning looks bullish, but the rest of the week looks very bearish. And so, but quantitative tightening, or we also call it QT for short, is scheduled to happen twice a week until the end of the year. And then going into January, then it happens about once a week for a few months, and then it goes to once every 2 weeks, and then once every month, up until about October. But once it gets into that once a month area, in May is when that starts. So we got May, June, July, August, September, and then October. This is when the investors are going to begin to see the light at the end of the tunnel. And they're going to really try to rapidly start to pump up the market as we go into spring and particularly summer. That way we can try to recover all the losses that these companies have lost over the last few years and try to make up for it in a very short period of time. And so that is our little story on quantitative tightening, or QT. But also there is a website that lately we've been kind of going to just to kind of see a forecast. We'll go to longforecast.com and kind of see what the NASDAQ is kind of forecasting with the stock market. And so and it always changes. You know, it's kind of fun to look at, but it doesn't seem to be very consistent, at least not in the long run. But it might in the short period of time. That's one of the reasons why I think we should start looking at it and talking about it, because by looking at the short term part of it, not so much the long term, because the long term, and this is all kind of generated using artificial intelligence and certain algorithms and things like that. But the artificial intelligence doesn't know certain scheduled events of what's going to happen and whatnot. So that's why it's just best to look at more on the short term part of it. So it's saying that October is expected to be up almost 8% compared to September, and then November it looks like that it's anticipated to be up 11% compared to September. So if we just do the math between the 2 months, so basically we have 8, 9, 10, 11, so you have 3% that the stock market is anticipated to be up in November. And then December looks like it's supposed to be down quite a bit. And as we were talking about that not too long ago, how December is the last month of the year, it's the last month of the quarter, plus that is the month that we have triple witching day on. And so that's all very bearish. And so this is saying that that December should be down right around 5.5%. And so that's quite a bit. And then January, same thing. January we're going to be down 5%. Then February we're going to be up 5%. And then March we're going to be down 5%. And then April we're going to be down more. And then May we'll be down even more than that. And then June we'll be up. But then this is saying that we're just going to be down. We're going to be staying down the whole time, which I don't believe that. This is where I believe where that whole quantitative tightening thing, we put that in, that little piece of the puzzle into play. We take that away. Now the government isn't selling billions of dollars worth of stocks. It's time to put billions of dollars into the stock market. That's where I would begin to not believe anything probably at this point on down. And so that's why we need to start looking at this regularly, every so often. That way we can kind of focus on, like the next 6 months or so, or 9 months, because that seems to be more realistic than any of this other stuff. So that's that. Let me see. Do I got anything else? Anybody else? Anybody have any questions, or anybody want to share anything? Anybody want to bring anything to the table? Everything makes sense. If you don't have any questions, you can feel free to unmute. You can talk, voice chat, whatever. Because if you don't, I'm assuming everything makes sense and you guys are ready to rock and roll. All right, that's good to hear, because it's good that you guys are always learning, because the more you learn, the more that you'll earn. So It's going to be a great week. We're going to make lots of gains, lots of money. If you guys ever have any questions, just hit me up on Messenger.